Okay, you guys, we're now going to look at exercise 1-2 on pages 38 and 39 in your text. And this one's a little bit more complicated than the previous one we looked at. But I think you'll enjoy it as well, or I know I do. We're still dealing with cash basis and accrual basis, except here in this problem, they give us the cash basis information and want us to prepare an accrual basis income statement. So work with me here and we'll get through all the calculations. Some of them are really straightforward and simple. It gets a little tricky, or some might say a little hairy with the advertising expense calculations, but we'll go through those in some great detail. Okay, let's read through the problem first. And again, just like with the problem, just like exercise 1-1, I'm doing the video of the one in the book for you. And then your homework problem will be completed on the Connect website, which I hope you all are registered for now. If you're having trouble with that, please contact me. What else would I like to tell you about that? I guess that's it. I hope that makes sense. It'll be a problem similar to this. The numbers will be different, and it'll be worked out in much the same way. Okay, let's read through it. Listed below are several transactions that took place during the second 2 years of operations for RPG Consulting. So they give us information on years 2 and 3. Of course, they've operated in year 1. They give us amounts billed to customers for services rendered, cash collected from customers, and then cash disbursements for 4 different items: rent, salaries, travel and entertainment, and advertising. Okay, then they give us some additional information as well, which we will sort through. And then required, calculate the accrual net income for both years. Okay, let's go ahead and start our income statement. I've headed it up here with RPG Consulting income statements. And we're going to do that for both years 1 and 2. Well, our revenues are simple. You guys, under accrual basis, we'll record revenues in the period in which they're earned. So the numbers we'll pick up will be amounts billed to customers for services rendered during that year. Year 2, these should read 2 and 3. Let me make that change. Sorry, I just caught that. Our revenues for year 2, $350,000. Revenues for year 3, $450,000. All right, now expenses. We'll start with rent. Okay, rent expense for year 2. Well, let's read about it. We paid $80,000 of rent in year 2. Now that's cash going out. Well, let's read about it. I'll come down in the additional information below the chart. Second sentence. In the last portion of that second sentence. The rent payment was for a 2-year period, years 2 and 3. Okay, so essentially what we're saying there, the $80,000 paid in rent in year 2 was for both years 2 and 3. Okay, so our rent expense for each year would be the $80,000 divided by the 2 years, or $40,000, equals the $80,000 again divided by the 2 years. Our rent expense is $40,000 per year. $80,000 was paid in year 2. Of course, the expense would be prepaid rent until those years passed off. Would become rent expense, $40,000 for year 2, and again $40,000 for year 3. Okay, our next item is salaries paid to employees for services rendered during the year. So this is going to be salaries expense. You know, you guys, just like on our last problem, they make this one simple. You know, the amount paid was for services rendered during that year. Okay, there were no salaries paid in year 2 for work performed in year 1, or no salaries paid in year 3 for work performed in year 2. The employees worked in year 2 and were paid for year 2, all in that same fiscal year. So salary expense for year 2 is the same as cash paid out for salaries in year 2, $140,000. They make that one simple for you. And then $160,000 in year 3. Okay, also we have travel and entertainment. Now, if you look in the additional information, they don't tell us anything about travel and entertainment. Usually, those costs are not incurred on account, or not, the payment of them is not delayed. In other words, if we travel in year 2, we'll pay for that travel in year 2. And that should make sense. Plane tickets, if we're going to travel in year 2, they make you pay for those up front. Meals would be paid at the time the meal's eaten, right? So that should make sense. The expense would be the same as cash going out that year. There's not going to be no delay. In other words, we're not paying for travel and entertainment in year 2 that was for travel that we did in year 1. We're not paying for travel and entertainment in year 3 for trips and meals that took place in year 2. Hope that makes sense. See, travel and entertainment expense. $30,000 and $40,000. And then we have advertising expense. Okay, now we're going to do some side calculations here, and we're actually going to end up answering the question for requirement 2 before we finish requirement 1. But let's read about our the additional information they give us concerning advertising. So first, we see that they paid cash for advertising in year 2, $15,000, and cash paid for advertising in year 3 was $35,000. Well, what we want to figure out is what's the cost incurred for advertising in year 2. That would be our advertising expense. And then cost incurred for advertising in year 3 would be our advertising expense for year 3. Well, they tell us in that first sentence below the chart, in addition, you learn that the company incurred advertising cost of $25,000 in year 2. Okay, well, there's our expense for year 2. They made that one simple. And the company owed the advertising agency $5,000 at the end of year 1. Okay, what they're saying, we incurred some advertising costs in year 1 that didn't get paid for until year 2, $5,000 worth. They also go on to tell us at the end of year 3, we don't have any liability to the insurance agency. So everything incurred in years, all the advertising costs incurred in years 1, 2, and 3 was paid to the advertising agency by the end of year 3. Our liability to the advertising agency by the end of year 3 was 0. All right, so let's come down. In the second requirement, they say determine the amount due the advertising agency that would be shown as a liability on RPG's balance sheet at the end of year 2. Well, we're going to come to that number before we come to the advertising expense number for year 3. So let's go down here and work through it. Okay, I made a space here for advertising cost calculations. And first, we're going to enter the amount owed at the end of year 1, which was $5,000. I hope you're with me there. That's given in the first sentence just below the chart. It says they owed the advertising agency $5,000 at the end of year one. Okay, now that's going to get paid in year two. All right, then we want to add to that cost incurred in year two. So the amount incurred in year two is the same as our expense for year two, $25,000. Now, when we add those two together, the $5,000 plus the $25,000, that's how much we're going to owe in year two for advertising costs incurred in year one and in year two. Hope that makes sense. During year two, we owe the advertising agency $30,000, $5,000 for costs incurred in year one that didn't get paid in year one, and then $25,000 for costs incurred in year two. And we want to subtract out the amount that we paid them in year two. What's left will be our liability owed to the advertising agency at the end of year two. Okay, I hope that makes sense. We're adding together, what did we owe the advertising agency at the end of year one? $5,000. Plus the cost incurred in year two, $25,000. So during year two, we owed the advertising agency $30,000 for cost incurred in year one and year two. So let's subtract out what we paid them in year two. So we'll say less amount paid in year two, or that's how I worded it. Okay, let's look for that. Cash disbursements for advertising in year two, $15,000. Okay, so we're going to say $30,000, the total that we owed them in year two for advertising costs incurred in year one and two, minus the $15,000, the amount we paid the advertising agency in year two. Excuse me, I did that incorrectly. We're going to say $30,000 minus the $15,000. That gives us $15,000. Okay, that's the amount that we owe the advertising agency at the end of year two. We're going to call that the liability at the end of year two, $15,000. Okay, and that's what they're asking for in requirement two. So there you go, you guys. There's your answer to requirement two. Okay, the liability at the end of year two. Now let's go back through that to this point. Okay, what do we know? At the end of year one, we owed the advertising agency $5,000. That's for costs incurred in year one that didn't get paid in year one. Okay, then we incurred an additional cost in year two of $25,000. So the total that we could have owed, the total we owed the insurance agency in year two was $30,000. $5,000 from year one, $25,000 from year two. So the most we would have paid them in year two, without getting into some prepaid advertising, would have been $30,000. But we didn't pay them that much. If you look at the chart, cash disbursements for advertising in year two were $15,000. So we subtract out the amount paid in year two to the advertising agency, $15,000, and that leaves us with a liability at the end of year two of $15,000. All right, now from here, that's the answer to requirement two, but from here we want to work our way into how much was advertising expense for year three. So let's pull that where we can see year three. Okay. Here's the number we're working toward. Well, how do we figure that out? They don't tell us cost incurred for advertising in year three. But they do tell us that at the end of year three, our liability to the advertising agency was zero. It says there were no liabilities at the end of year three to that advertising agency. So we know at the end of year three, we didn't owe them anything. We also know in year three, we paid the advertising agency $35,000. So we're going to subtract that out. And we'll take the absolute difference, really, you guys. And I'll just call that less cash paid in year 3. So what did we owe them at the end of year 2? $15,000. If we subtract out what we paid them at the end of year 3, the $35,000, that difference will be our advertising expense for year 3, since we know at the end of year 3 our liability is 0. So really, again, we're kind of taking the absolute difference. This is going to be $35,000 minus the $15,000. We're just taking the difference. That's why I put that one in as a negative number, minus the $15,000. That leaves us with the advertising expense in year 3 of $20,000. And you might think, why would that work? Well, we know we owed them at the end of year 2 $15,000. We know at the end of year 3 we owe them nothing. Okay, so this $35,000 paid in year 3, $15,000 of that wiped out what we owed them from year 2. The remainder of that $35,000 that got paid in year 3 was the expense for year 3, $20,000. We know that's the expense for year 3 because there's no balance owed to the advertising agency at the end of year 3. Had there been, let's say, a $5,000 balance owed to the advertising agency at the end of year 3, then we'd have to add in that $5,000 balance to the 20 to get the advertising expense for year 3. Hope that makes sense. See, the 30, if we had owed them, let's just say, for instance, we had owed them $5,000 at the end of year 3. That was our end of year 3 liability. They tell us it's 0. But just to give you another example, if the liability at the end of year 3 were $5,000, then the $35,000 would have wiped out the $15,000 owed at the end of year 2. That gets us down to $20,000. And if we still owed them $5,000 at the end of year 3 for cost incurred in year 3, then we'd have to add that $5,000 to the $20,000 to get the expense incurred in year 3. Hope that makes sense, you guys. We don't owe them anything, though, at the end of year 3. So to get the expense for year 3, we take this $35,000 that we paid them, less the $15,000 that we wiped out from year 2, and that leaves us with advertising expense for year 3 at $20,000. If there were a $5,000 liability at the end of year 3, that expense for year 3 would be $25,000. If the liability at the end of year 3 were $15,000, or let's pick a better number, I don't want it to come out like that. If the liability at the end of year 3 were $25,000, then we would know what cost incurred in year 3 were we paid $35,000. 15 of that wiped out the balance at the end of year 2. That leaves us with $30,000 in expense that we paid for, and another $25,000 that we incurred in year 3. So the expense for year 3 would be $45,000. Hope that makes sense, you guys. Let's go through it one more time, starting at the beginning. Okay, the amount owed for advertising at the end of year 1 was $5,000. We're going to add to that advertising cost incurred in year 2 of $25,000. So during year 2, we owed the advertising agency $30,000. $5,000 for year 1, $25,000 for year 2. We only paid them $15,000 though. So that leaves us with a liability at the end of year 2 of $15,000. The difference in the amount paid and the amount we owed. That's your answer to requirement 2. Okay, then we know the balance owed to the advertising agency at the end of year 3 is 0. Okay, so this $35,000 paid to the insurance agency, $15,000 of that wiped out the debt owed at the end of year 2. The other $20,000 had to be the expense for year 3. You guys, if you have questions, please feel free to contact me anytime, and good luck with your homework problem. Or, I'm sorry, I'm trying to quit too early on you. I wrapped up requirement 2. Let's go back and finish this up. Our advertising expense for year 3 would then be the $20,000. Tried to quit before I finished there. So we put in $20,000 here. We're back to the easy part now. So we'll take revenues, $350,000. To get net income, we'll say it equals revenues of $350,000 minus all of our expenses, $40,000 for rent, $140,000 for salaries, $30,000 for travel and entertainment expense, and $25,000 for advertising expense. That gets us net income of $115,000 for year 2. Then in year 3, we've got revenues of $450,000 minus $40,000 for rent, minus $160,000 for salaries expense, minus $40,000 for travel and entertainment expense, and minus $20,000 for advertising expense. So our net income for year 3 was $190,000. I enjoyed that one quite a bit. The requirement 2 requires some thinking. You have to put some thought into it to get this advertising expense number for year 3. I hope you guys enjoyed it. This is the kind of thing we're going to be working with quite a bit in intermediate, and I hope my explanation made it a little more clear. I hope I didn't just muddy the water for you there. But if you have questions about it beyond what you're picking up here in the video, please feel free to contact me with them. Either via email, on my office phone, or on my cell phone, and you guys have all that contact information in your syllabus. Thanks a lot, and good luck.